Welcome back to the Michael Gaddis Show. I am your host, Michael Gaddis of www.michaelgaddis.com. I am also the CEO and NMLS licensed mortgage broker for Frontier Loan Group, Inc., or as we like to call it, FLG. FLG is licensed by the California Bureau of Real Estate as a real estate broker, license number 01449152, NMLS ID number 345305. I am also licensed by the California Bureau of Real Estate as a real estate broker. My broker license number is 014-33800, and my NMLS license ID is 280011. Did you hear something on AM 1170 The Answer that you want to weigh in on? Download the free AM 1170 The Answer app to instantly call or email the station straight from the app. And remember, if you download the AM 1170 The Answer app, you have a chance to win a $100 gift certificate to Vigilucci's Italian restaurant. And as I mentioned before, Vittorio, the general manager of Lucadia of the Vigilucci's restaurant, came in our show a couple weeks ago, and you really want to visit this restaurant. So this contest ends October 31st, so go out there and register and see if you can win. So how much does a reverse mortgage cost? Well, that is probably one of the most frequently asked questions that I get today. And that's also one of the major myths and misconceptions about reverse mortgages, that they're just so expensive that everybody's out there to get these senior borrowers, which is not true. So, as I mentioned, a frequent question that I might ask pertains to the costs associated. So, as I mentioned time to time again, obtaining a reverse mortgage can literally be a life-changing event for some homeowners. However, like anything that you would do, you need to do your research and you need to find out what's going on before deciding to move forward. And I'm sure lots of people have heard lots of different explanations about the initial reverse mortgage costs. So I'm going to try to straighten them out for you a little bit. To begin, a reverse mortgage is a loan. So you will have normal associated costs with acquiring a loan. And what are the normal costs? Title, escrow, little doc fees, things like that. So you're going to have the normal associated costs. Now, you will also have to pay for an appraisal. So aside from these customary refinance fees, you will have to pay an upfront FHA mortgage insurance premium. Now, this is one of the two fees that when you see a breakdown of a reverse mortgage, that will kind of open your eyes a little bit, because the FHA upfront mortgage insurance fee premium, MIP, can be a little bit expensive depending on the value of your house. And there's a formula that goes into that to determine how much you pay. But let me explain a little bit about what you're talking about. So the amount of the MIP depends on what percentage of your eligible principal limit you take as an initial disbursement. So that means the day that you close your reverse mortgage, whatever your principal balance is, there's a calculation that determines what the percentage is of your eligible principal balance, not of your necessarily of your value. So if you take 60% or less of your eligible principal limit at closing, you will have an MIP of 0.5%, 0.5%. So, but if you take greater than 60%, you will have to pay 2.5% as an upfront mortgage insurance fee. That's a big jump. So if you're on the border between, maybe 0.5% or 2.5%, there's ways that, like at FLG, what we try to do is run different scenarios for you to show you, hey, look, we can cap your MIP at 0.5%, so your upfront, MIP fee and your closing costs are lower. Or if you want to make sure that you have a lot more available funds, you can go ahead and pay the 2.5%. But we like to give everyone options. But I know it's a little hard to follow. But let me give you an illustration. Let's say you have a home that appraised at $500,000, and the youngest borrower on the loan is 70 years old. The amount of your eligible principal limit is based upon the age of the youngest buyer and is represented by a percentage of the appraised value of your home, or $625,500, whichever is less. In this case, the appraised value is $500,000, which is less than $625,500, so we are going to use $500,000. Now, the youngest buyer in this example is 70 years old, And the current principal limit factor for a 70-year-old is 0.576%. So basically 57.6% of the eligible amount. Now, there's a chart that determines this, which I'll probably get into in a different show and break down how they determine those limits. As you get older, that number gets bigger and bigger, and you're entitled to more and more of your cash. So let's say we multiply the $500,000 value by the 0.576 factor. That gives us an eligible principal limit of $288,000. So in order to have a 0.5% MIP, the initial disbursement cannot be greater than $172,800, which is basically 60% of $288,000. This includes any amount of money eligible to you in the first year as a HELOC. And what does that mean? That means in your first year, you can get a certain eligible HELOC. Say you close with a balance of let's say in our example, you have a $150 initial principal balance, but they also give you an initial first year open HELOC of $40,000. Well, because you have access to those funds in the first year, they add that in to the amount. So that means that you're dealing with a 190, not necessarily the 160 that we were talking about. So in this case, you would have to get a 2.5% MIP. Now, in this scenario, what we would do at FLG is basically give you two different proposals. One with a 0.5% MIP, the other with a 2.5% MIP. Now, we don't get the MIP. The MIP goes directly to HUD. So it's not like it's a fee that we get to collect. Confusing? Well, it might seem that way, but if it's hard to really relay that particular information over the radio. But if you sit down and look at it on paper, it'll make sense. It just takes a few times to look at the numbers and see how the equations work out. But it's there. Now, some people, when they come in, there's no way to get around the 2.5% MIP. The initial eligible principal balance is your initial balance is just going to be too high. There's nothing we can do about it. But, what is an MIP? Well, an MIP is a fee that goes to HUD, not the broker or to the lender. The HUD uses that as its insurance fund in case of default. Now, in a reverse mortgage, you might be saying, well, the risk of default in a reverse mortgage is extremely low. Well, the problem is that, there's, reverse mortgage distributions are based upon projected lifespans. So if you exceed your projected lifespan, that means that the investor could either go into a negative equity situation or, you could eat up all of your equity. So at that point in time, the lender starts incurring losses, which the HUD is there to insure against. And that's one of the reasons why, so many investors really like this particular program. So, FHA calls it the MIP, and it's intended to cover basically your lender in the case of default on your loan. So it's one of those things you really can't get away from. And so lastly, I want to talk real quickly about origination fees. Origination fees are negotiable. Now, most of the time, like at FLG, depending on what your initial disbursement amount is, we can waive our origination fee, meaning you don't pay anything to us up front. And you can do that with other lenders too. You just need to negotiate with them. Now, if your initial principal balance is really low or, very nominal, then we might have to, charge an origination fee. It just depends on your particular set of situation. But you need to know that is a negotiable fee. So keep that in mind. So in conclusion, your costs could be treated, your costs of reverse mortgages are mainly elevated by upfront MIP fees and potential origination fees. So, well, that does it for today. I want to thank you all for listening to the Michael Gaddis Show on AM 1170 The Answer. I am here every Wednesday night at 8 p.m. discussing anything and everything related to real estate. If you want to contact me with questions or topics for the show, please feel free to email me at michael@michaelgaddis.com. Contact me via Twitter at MGJDRealty. Call me at 888-242-2272. Or you can visit my Facebook page at Michael Gaddis Realty Group. Again, you have been listening to the Michael Gaddis Show on AM 1170 The Answer. Good night, San Diego.